Welcome to Wealth Wisdom. If you have ambitions to achieve financial success, please leave "yes" in the comment, and we are here to help you obtain insight and build wealth. Today, I'm breaking down exactly how I built a $50,000 investment portfolio, starting from zero. No inheritance. No six-figure salary. No get-rich-quick schemes. If you're just getting started with investing or struggling to make progress, this video is for you. I'll show you the step-by-step mindset, strategy, tools, and timeline that helped me reach this milestone, and how you can do it too, even with a modest income. Let's get into it. 1. The mindset shift. Before I put a single dollar into the market, I had to change the way I thought about money. For the longest time, I believed investing was only for wealthy people or people who were already financially secure. I'd hear words like portfolio, dividends, and capital gains, and I'd tune out, thinking, that's not for someone like me. But here's the truth. You don't wait until you're rich to invest, you invest to become rich. Once I embraced that idea, everything started to change. I stopped thinking about money just in terms of spending and started thinking in terms of building. Building habits. Building assets. Building wealth. I made 3 mental commitments. 1. I would pay myself first, no matter how small my income. 2. I'd invest consistently, not occasionally. 3. I would focus on long-term growth, not short-term wins. This mindset became the foundation for everything that followed. 2. My financial starting point. When I began this journey, I was earning about $2,800 per month after taxes. Rent took up about $900. Groceries, phone bills, and transportation ate up another $1,200. That left me with roughly $700 of discretionary income each month, and it felt tight. But I made a decision. I was going to invest at least $200 per month, even if it meant cutting back elsewhere. That meant cooking more, eating out less, canceling subscriptions I barely used, waiting longer between phone upgrades, and saying nope to some social events that weren't in the budget. It wasn't glamorous, but it was real. And it worked. 3. Building the habit. The key wasn't just saving money, it was making investing a non-negotiable habit. Here's what I did. Automated transfers from my checking account to my brokerage every payday. Set up recurring ETF purchases so I wouldn't overthink it. Tracked every dollar using Google Sheets at first, then later YNAB. Every month, without fail, money went into my portfolio. It didn't matter what the market was doing. I just stuck to the plan. Over time, the discipline became automatic, and I stopped second-guessing myself. 4. The first $5,000. Before I started investing, I prioritized building an emergency fund, around $5,000 or 3 months of expenses. I kept it in a high-yield savings account to earn some interest while staying liquid. That fund gave me peace of mind. Knowing I had a cushion meant I could invest without fear, and not panic when unexpected expenses popped up. Once that was in place, I turned to index investing, low-cost ETFs like BTI, Total US Market, VXUS, International Stocks, BND, Bonds for Stability. I didn't try to pick winning stocks. I just bought a small piece of everything. That meant instant diversification, and fewer sleepless nights. 5. What tools I used. Here's the exact toolkit I used. Brokerages. I used Fidelity and Vanguard for long-term investing. Apps. I tracked my budget with YNAB and later used Mint for net worth tracking. Books and resources. I read The Simple Path to Wealth by J.L. Collins, watched investing YouTube channels, and listened to finance podcasts during my commute. Most importantly, I kept things simple. No crypto, no meme stocks, no options trading. Just boring, consistent investing in index funds, and it worked. 6. Year-by-year portfolio growth. Let's break down how my portfolio grew year by year. Year 1. Monthly contributions, $250. Total invested, $3,000. End of year value, $3,200. Year 2. Contributions, $4,800. Small market gain. Total value, $8,300. Year 3. Invested more aggressively, $500 per month. Total invested, $6,000. Portfolio value, $15,000. Year 4, pandemic. Stuck to the plan despite volatility. Invested $5,000. Portfolio grew to $23,000. Year 5. Market recovery plus consistent investing. Portfolio jumped to $38,000. Year 6. Salary increased slightly. Continued investing and reinvesting dividends. Hit $50,000 in total value. The takeaway? Consistency plus compound growth equals real results. 7. Mistakes I made. I didn't do everything perfectly. Here are some lessons from my mistakes. I once sold an ETF during a dip because I panicked, and ended up buying it back at a higher price. I chased a hot stock tip from Reddit, and lost $600 in a week. I waited months to invest during market uncertainty, missing out on gains. What I learned. Time in the market beats timing the market. Diversification is your best friend. Stick to the plan, especially when it's hard. 8. How to start today. If you're starting from scratch, here's what I do with just $100. Open a no-fee brokerage like Fidelity, Schwab, or M1 Finance. Buy a total market ETF, like VTI or ITOT. Set up auto deposit for even $25 per month. Track your progress monthly, celebrate small wins. Learn from reliable sources, not hype. If you can commit to investing just $100 per month over 10 years with an 8% return, that's nearly $18,000, all from starting small. Final thoughts. Look, I'm not a financial advisor. I didn't grow up wealthy. But I stayed consistent. I stayed patient. And I played the long game. If I can build a $50,000 portfolio from scratch, you can too. Let me know in the comments. What's your investment goal for the next 12 months? And if you found this helpful, give it a like and subscribe for more weekly videos on investing and personal finance. And don't forget, you don't need to be rich to start. You just need to start. Thanks for watching, and I'll see you in the next one.